Extreme weather conditions have hurt Rio Tinto's iron ore production in Western Australia, and driven prices to their highest level in years. In its latest production report, the mining giant said iron ore output from its Pilbara mines fell 9% in the first quarter of this year. Tropical Cyclone Veronica caused damage at Rio's Cape Lambert port last month in northwest WA and also affected BHP's operations. A fire at Cape Lambert in January saw Rio's iron ore output fall by 1/5 from the last few months of 2018, and shipments were also reduced. Rio Tinto Chief Executive J.S. Jacques said the extreme weather had lowered the company's iron ore forecasts for the 2019 financial year. Our iron ore business faced several challenges at the start of this year, particularly from tropical cyclones, he said. As a result, and following the continuing assessment of damage at the port resulting from the cyclones and other minor disruptions, 2019 guidance for Pilbara shipments is reduced to between 333 and 343 million tons. Iron ore prices forecast to fall. Rio Tinto originally expected to export up to 350 million tons of iron ore this year. The impact of cyclones on Australia's iron ore miners has added to a shortfall in the iron ore market after a waste dam burst at a Vale mine in Brazil, in January, killing more than 200 people. Closures of other Vale mines and waste dams by Brazilian authorities has pushed iron ore prices to above $94 a ton. News of the iron ore production cut pushed Rio Tinto shares to their highest level in almost 11 years, on expectations of higher iron ore prices. Westpac said last week that the global iron ore market was facing a shortfall of 34 million tons this year. It has raised its forecast for benchmark iron ore prices to $87 a ton for the end of the June quarter, but expects prices to fall to $77 a ton by year-end. Oil search revenue drops. Weaker oil and gas prices weighed on oil search's revenue over the March quarter. The Papua New Guinea-focused oil and gas producer saw both revenue and sales drop between the December 2018 and March 2019 quarters. During that period, total sales from its Papua LNG project dropped from 7.82 million barrels of oil equivalent (MBO) to 6.65 MBO. Revenue fell from $503.1 million to $398.1 million from the December quarter to the March quarter because of lower global energy prices and the later timing of LNG shipments. However, revenue lifted by more than 1/3, compared to a year ago, after an earthquake struck PNG. During the quarter, Oil Search and its partners, Total, and ExxonMobil signed an agreement with the PNG government to develop the Papua LNG project, which could help double the country's LNG exports.